as an impact investor, and well, we position ourselves in every investment that we do as a true impact guardian. So like we really aim to embed impact into the operations of the portfolio company. The main challenge is that the rule of the game remains financial results, right? And especially when you are a startup or a scale up and there are multiple fires that needs to be taken care of.
Welcome to this week's episode of Leaders on a Mission. I'm your host, Simon Leach, and we have a great show for you today. Now, investing across food and agriculture value chain, it really means grappling with climate risk, fragmented systems, and the urgent need for innovation, but it also offers some of the biggest, I suppose, opportunities and levers for planetary impact. And today I'm really pumped to be joined by Rogier Pieterse, managing partner of Pymwymic. Pymwymic are a pioneering impact investment firm, really reshaping how capital flows into food and ag. And during this discussion, we're going to dive into how they really define real impact, the evolution of the sector, and what the future holds for sustainable food systems. So, Rogier, we got loads to get through today. So, thanks so much for coming on.
Amazing to be on the show. So thank you very much. Looking forward to it as well.
No, awesome. So, just tell us, about an inflection point in your career or personal life that drew you to this world of impact investment, because you had such a broad and varied background prior to this, right?
Yeah. Yeah, I think it all comes across, or it all comes back to the moment in life where you realize that working is one thing. Obviously, you need to you need to earn you need to earn money, but in the end, you're spending most of your life with your colleagues. And I started as I always call like an evil investment banker. So I lived for a long time in London and in Frankfurt, aiming to get as much capital into quite successful firms, but then basically just focusing on the capitalistic part of it. And after 8 years, living the true investment banker life, I also at a morning came to the conclusion that, I was quite blessed with, the background I came from, and also with, somehow the brains that I got from my parents, that I thought that was not the way how I wanted to live my life, and I want to contribute as well to a better world in general. So and this is a very long time ago, like I'm talking more than 20 years ago, like I shifted into the renewable energy sector, which was by then still very early days, right? So truly pioneering. And that's basically fills the whole path of my career, aiming to pioneer and to combine my working life with contributing to society. So yeah, I can talk
Amazing.
much longer about that, but yeah.
So you gave up the pursuit of kind of wealth and personal gain, and yeah, I mean, not everyone can make the jump out. Sometimes it can be quite addictive.
It is. But it's a bit around, and I'm not sure how much you know Rutger Bregman, which is quite a known person in the Netherlands, but he is setting up this movement around moral ambition, and it's around moral ambition, I guess. And I think more and more people do realize that, you can let go a bit of your capitalistic views and still, have a good life, but also contribute in other matters as well. They shouldn't be set apart per se.
Yeah, and actually, if I think about maybe the last 8 to 10 years, you can really see companies set up actually to with moral ambition at their heart, right?
100%,
So
100%.
yeah, which probably didn't exist beforehand so much, right? This is a relatively new space when you
It
think
for
about that.
sure becomes more common, right?
Yeah,
Sustainability in general, like although right now we are maybe in a phase where sustainability is a bit bit pushed to the background, but I still strongly believe that it becomes the new norm, right? So that's maybe the reason why it's less on the forefront, and that's on personal and professional level.
Yeah, absolutely. So tell us a little bit about kind of Pymwymic um, and the problems you're solving. In fact, let's start with the name. I mean, what a name. I mean, to tell
It
us a
is
little bit of
quite a name, huh?
history about this.
Yeah, to be honest, the moment when I was introduced to Pymwymic, indeed, I initially thought it was a bit of a joke because it is, well, for sure, a catchy name, but it literally stands for the "put your money where your meaning is" community. So it's an abbreviation of that, and it's one of the first impact investors in Europe. It was launched in 1994 by 19 pioneers who I think a bit the same like myself, but truly wanted to do something different and pioneer. And in these days, impact investing wasn't a known term, and they called it investing through the three P's, so people, planet, and profit. While obviously in these days it was, and I think even today is still predominantly focused on profit. It started with the aim to show people that you can invest while making profit and actually also do something good. And that's those 19 pioneers started basically supporting social entrepreneurs in every type of industry, whether it was solar panels, whether it was indeed food systems, but also education. And they did that all over the world. So you can say not a lot of focus. And that really started the movement, right? So that 19 pioneers just simply grew and became more sort of an awareness platform besides the matchmaking that we did in those days. So we started organizing events annually called Impact Days. We started to create all type of reports of showing how it can be done, simply to inspire what we call the more cold side of the capitalistic system towards the more warm side of the capitalistic system. So how can you invest also more with your heart, simply, versus the way how we have been taught it in the well, basically on schools. And that movement grew and grew, and around 2015, the two founders, well, they got to an age that they thought, well, like it is a moment to somehow transition as well. That's the moment where I came in, and one of my other founders, who is actually regenerative farmer himself, but he was just before me, and we were basically asked to support the transition of being like this BV, or like this entity in the Netherlands, indeed doing more matchmaking and this awareness creation, into bundling all the private wealth into a cooperative, and then through that cooperative set up thematic sub funds and attracting also the bigger capital onto the sub fund level to really scale and, well, make a difference. Because all the matchmaking that we did was amazing, but those type of investments, well, they went up to 500 or 600,000 euros max, and that didn't really move the needle. So by now pooling all the private wealth in a cooperative, well, first and foremost, really, well, created an entity where the individuals and the wealth holders can come together, or still come together. But then on the same time, we often envisage Pymwymic as, well, this this little person who tips the first, yeah, how do you call it, the first block of your dominoes, right? The first domino stone. And then it escalates to bigger stones later on. And that's a journey that we are still on. Like the purpose of Pymwymic and the mission that we have is making impact investing the new norm. And we have ambitious targets with that, but it has been a journey. But I also have to say that since 2016, where the term impact investing indeed even was still quite new. Nowadays, for sure, we are further down that path. So I'm quite positive on, well, the movement that is growing. And I think in 2016 it was around 1% or so of total venture capital going into impact. Now it's around 3. I mean, is it a major shift? No, Is there still a lot of room to improve? Yes, and that's the journey that we are trying to push for.
Got it. Well, 1% of what though, and 3% of what?
Yeah, it's the global. It's the global venture capital invested, and then you end up a bit in the debate. What is impact, right? And then you end up with different funds, and probably we will touch upon that later as well. Like you have the various type of Article 6, Article 8, Article 9 funds under the SFDR regulation. Let's take the most broadest term, like everything that, every fund that calls himself or itself an impact fund is then considered under that percent, right? So it's still all very limited.
Yeah, no, got it. And you think about 2016 to now, right? Oh, wow.
Yeah.
There has been kind of a few different waves. I mean, it's been a bit of a crazy 9 years when you think about some of the stuff.
Yeah.
I suppose as investors or a strategic kind of impact fund that you've had to deal with in that time, actually.
Yeah.
And what do you think has been the most challenging kind of when you think if you were to think back?
Well, I think in general, as an impact investor, we position ourselves in every investment that we do as a true impact guardian. So, like we really aim to embed impact into the operations of the portfolio company. The main challenge is that the rule of the game remains financial results, right? And especially when you are a startup or a scale up and there are multiple fires that needs to be taken care of, keeping the consciousness around impact on the agenda, even as a very active board member, is a challenge. On the other hand, we also are fully aware of the fact that you can aim for the most amazing impact, but when a company doesn't survive, it is no long-lasting impact at all, right? So that is the balance. Not per se in the case that leadership of these type of portfolio companies are not willing to address the impact that they aim for with their solution, but it's predominantly also with the other shareholders in your cap table, who just have different incentives. I think we all have the same incentive to make the most of it financially, but like, where do you focus upon? I do believe that over the last 9 to 10 years, also, even for the most generalistic investor, it has become clear that impact has value, right? Being more sustainable in general has a value. On the one hand, retaining talent and attracting talent. On the other hand, at a certain moment, your product, if it's not sustainable enough, it simply won't survive as well in a competitive landscape. So quite positive in that movement, but like the biggest challenge is taking others along in the journey whilst you are not a majority share owner, right? Like often we have, ranging basically between 5 and 30% of the cap table. So yes, depending on where you're at, like our say is rather limited. We always take very active board positions because of that.
Yeah.
Yeah.
No, thank you for sharing. I mean, it's really interesting. And it's probably even more divisive during really difficult times when, funding might be light or, the battle for survival, all of a sudden the battle of survival just kind of kicks in and that can dominate, can't it?
Yeah, that's true. Well, on the other hand, and again, like we don't see impact as a reporting exercise, and I think that makes us also a bit different than others. And luckily enough, the approach that we take with prior to even investing, building together with the leadership team, what we call a theory of change. So basically, you create a mission, and from that mission, you go top down to define the right KPIs. Those KPIs shouldn't be CO2 reporting or greenhouse gases report. Like they should actually be somehow linked towards the operations that a company tries to achieve, right? So even if they are struggling financially, still, if you have set the right theory of change and the right impact KPIs, they should talk one-on-one. So to give an example, we quite often support companies which in one way or the other reduce the chemical load of applications that farmers or growers use. And if you have an impact KPI defined that like they develop certain products which reduce a chemical load by a X percentage, then still, even if you need to decide for product A or product B, you can still assess whether product A or product B launching creates a higher or a lower impact from that chemical load reduction perspective, right? So it is about setting the right KPIs in the beginning, and the moment when it's there and the moment when it's integrated throughout the operations, it's not a lot of additional effort, and it actually supports the business in general.
Yeah, yeah, absolutely. But looking through the portfolio of companies, I mean, they are, you can see the nature of what they're doing. They all have that mission, don't they? Right? They're all
Of course.
designed to, to really solve a sustainability kind of issue
Yeah.
out there, actually. And
I
yeah,
mean, without that, we wouldn't invest.
yeah.
That's I guess the most important thing. But we have a lot of debates also with our investors. I mean, in the food system, and I think I don't need to tell why food systems are important to transition, right? Or why, from a sustainability angle, we do need to redesign the way how we produce and actually also how we consume our food. But even within that whole system, you have upstream, you have midstream, you have downstream. Downstream, you're obviously more focused on consumer behavior. Midstream, more focused, for example, on food waste. And upstream, and that's where our prime focus is predominantly how do we restore our soils. We truly believe that we need to start with restoring soil health in general. And restoring soil health in general, like you have multiple applications even there, but that's in our whole portfolio. We look at those solutions which improve soil health, but even there, like you can have a very rigorous view, like you, for example, only can apply regenerative farming practices that we need to support, but also there we do believe that we need to support transition solutions, which, for example, reduces the chemicals that are being used, but still use chemicals, right? I mean, we need to be fairly honest in that. But that's where we try to always find a bit of a balance. And sometimes that is a bit of a gray area because
Mm.
the purists of this world probably will say, well, Roger, it's nice that you are saying that you're supporting that new system, but you are still using chemicals. Yes, that is true, but we are at least supporting solutions which at least reduce 70 to 80% of the normal load that is being used. And for sure, that supports soil health.
Yeah, yeah, yeah. No, no. Get it. Absolutely. Tell me, like, so when you think about this space, for instance, maybe give us a couple of examples of, you know, because you're very focused on technology as well, though, right?
Yeah.
This is about innovation as well, right? So maybe give us a couple of examples of, some innovations that you're really excited about that you see have a big impact in this space.
Yeah, I think the problem that we are trying to solve, if you look through, well, on the 21 or the 22 portfolio companies that we have, is we try to further digitize decision making on farms. Right? I mean,
Mm.
it's one of the least digitized industries that are out there. And data on farms is just essential to provide the farmer or the grower with a bit more backing than just the gut feel. And that is, I mean, it's quite an old-fashioned industry, right?
Mm.
On the one hand, like Pymwymic tries to transition two industries. It tries to transition the way how we invest, the capitalistic industry or the capital industry, and we try to transition the farming or like the food system, which is also a very old system. And but back to the farmer and the grower who need to have more data to make the right decision. What we try to do is provide them with a means to an end by a hardware product, And that hardware product then actually collects the data, and then obviously the data can be modeled, where you talk about machine learning, AI, and well, the technologies that nowadays are also becoming more and more, I think, known. And that is throughout our portfolio, and whether it's the smart pest monitoring, so let's say providing farmers with actionable insights on when and how to spray based on pictures automatically being taken in the field, and based on the database can show where a certain pest development is. That's one. Or whether it's cameras on the tractor, which provides the farmer real-time data and directly speaks to the sprayer, and then knows when to spray or when not to spray, or how much to spray. So there's always this hardware component, collecting data, machine learning to ensure that based on the data you make the right decision, and then providing the farmer with an actionable insight. And that range from indeed these type of spraying indications, pest management, but also irrigation, which is also becoming a more important part of decision making in general. We are moving a bit more towards food waste as well. So how can hotels, restaurants be more efficient with the way how they set their menus, or how can growers and retailers be more effective in determining shelf life of strawberries or blueberries? Again, all are hardware components with data, machine learning, and providing actionable insights.
Yeah, no, great. I mean, it really seems you've been focused on this, and all these areas that you mentioned around kind of, I suppose, the farmer having these actionable insights is related, and it comes back to this core soil health component, right? I
Yes.
I, I kind of assume, yeah.
Yes. Yeah, it does. And like our own theory of change, or like the mission that we want to achieve in the food system, is yes, it's soil health, but it's also trying to provide the farmer with solutions that they can strengthen their position.
Yeah,
Because we also truly believe that the farmer in this whole system is, well, the ones who often gets the blame, but
yeah.
for sure is not per se the one who also actually earns the value of the hard work that they do.
Right. Okay. Yeah. Yeah. Absolutely. And well, you hit. Yeah, no, it's really interesting. So when you think about like, your life's journey now with this investment, you've invested, as you've mentioned, 21, 22 companies, really specific kind of niche area. You're really looking at this long-term transformation of this kind of system, as it were. Where are we on the journey around adoption, do you think, like now in 2025? How much progress have we made?
Well, we are currently living in an interesting time in general, and therefore also for venture capital. And there's often or nowadays there's often the debate whether venture capital fits with the dynamics of ag tech in general, and that simply has to do with it's very seasonal, right? So adapting new technologies requires a longer cycle than, well, traditional SaaS. The users are in general way older than, well, the user for in, well, the SaaS businesses, like the Facebook worlds of this, or the Facebook items of this world. So like it is just
Bit different from the
it's
software world, isn't it?
it's a big difference, and therefore I do believe that the struggle that VC and ag in general has is that the moment when VC came into the ag space, they expected like, well, like there's this amazing opportunity because there are a lot of big problems. We scale this within 3 to 5 years, and then we have like 10, 15 times our money back, and we have a bit like this San Francisco, California model, and that simply is not happening, right? And there's a lot of disappointment right now that it takes longer, it's more expensive, adoption cycles are not there, and well, you need to be in a way happy with, well, 3 to 5 times your money back, but it also takes longer. So it is a where we are right now is, I think, a maturing of the industry,
Mm.
specifically in VC and ag. where there's quite some balloons which are deflating. Is that a bad thing? I don't think so, because especially for the investors who have this longer term angle like ourselves, and investors who also in a way prevent it to be too much driven by the extreme hypes around vertical farming or alternative proteins. Um, well, maybe competition is leaving, but it also means that right now, on a more rationalized base, you can actually step in. And well, the golden rule is buy low, sell high, right? So versus the other way around, and that is where we currently see much better opportunities in the market, whilst obviously the general sentiment is quite depressed.
Makes a lot of sense to deploy capital in this market now compared to
It does. It does.
chasing the highs. Just a couple of things on what you've said there. Just like looking back, when you saw in 1920, 21, when you saw all this kind of San Francisco money coming into the space,
Yeah.
what were you thinking at the time? Were you thinking that shit? They just don't get how long it's going to take, how long commercialization is going to be, or were we just crossing your fingers and hoping that we'd get some
Well, we
quick
are we
wins?
we are we are all human beings in the way that the moment we are in such a hype, like you are, you're in a way also influenced by that hype, right? So in a certain way, you also think, well, wow, like the sky is really the limit. And for sure, we also made investments where, well, if you now look back, it's like, yeah, well, that entry value for sure was a bit too steep. Um, we have been quite lucky as well that in that hype we have been able to actually realize some solid exits, right? So in also this space there is quite a limited amount of exits, and we have been able in that time to be able to sell off some of our portfolio companies, which now are, well, denominated as a success, which supports us again in our further journey and our own credibility. And with that, and having that said, like also right now, you need to think long term, and that's for sure also what we did at that moment of time. Like we also missed out on a lot of investment opportunities because simply we thought it was too expensive. So the trick, or like the gold rule, is that you don't think too much in a 2 year cycle, but you think in a 5, 6, 7 year cycle. And that's also how I see it right now. I mean, things will return back to a bit more normal and not the hypes of 2018 and 2019. So it's difficult because you have pressure from all types of stakeholders. Obviously, we also had the pressure of LPs who said, "Well, like Roger, when do you deploy?" And like money needs to go out. Yeah, stay with your core, right? And stay with your focus. Um, that for sure helps, and
Yeah,
we do the same now when the cycle is a bit more on this downturn.
yeah, absolutely. And the other thing as well is like when you're seeing hype, like hype areas, like you think about alternative protein and what happened there. Is there part of you, maybe your thesis isn't really driven towards that space? You've mentioned a couple of key areas that you're focusing on. Do you start having a little look at it, and there's always the challenge and the danger of then jumping into it, right? Because hype is just a get. I mean, that's the problem with hype. You get caught up in it, don't you? You can't help but get caught up in it.
Yeah, well, maybe I'm lucky that I don't suffer that much from fear of missing out in general. I mean, in all the life choices that I've made, I've been quite swimming against the current, and I think within Pymwymic we do a bit the same, which is good. With regard to, I mean, right now, and I think in the recent year, that's now a bit cooling off, but you had the whole bio input space,
Yeah.
which for sure has been inflated a bit, to my opinion. Um, it has a bit more like a pharmaceutical approach, right? It takes a very long time prior a product actually comes to market, and then when it comes to market, it really booms. But like also there, like we refrained from joining the hype of amazing valuations and then banking on the success of a bigger valuation in the next round, because we simply look at like who in the end will buy this, right? Where's the like the it is around finding somebody who actually can buy it for a proper price. So um it's staying again close to yourself and thinking about what are the true winners in this industry, right? It's quite an open door, but then true winners on itself do not per se need to be priced extremely high from the beginning. They also gradually grow. So yeah, uh, hypes or no hypes, we currently just still keep focusing on those opportunities which are reasonably priced and where we feel comfortable that even with a longer time frame, we still can sell between 50 or 100 million. Because in the end, in this industry, also strategics are still the most likely exit partners. And there is also has been this big hype around IPOs, and a lot of IPOs will come in to well, to save the days, but there hasn't been one, right? So
Yeah.
it has been strategics, and if you look at strategics and you look at their balance sheets, they don't easily pay like the unicorn billion price for a solution, right? We had of course we had Climate Core, but it was 2013. That's a long time ago. And since then, all those valuations, like the big winners, they vary between 100 and 300 million. So like you can reason back if you want to have a certain exit multiple that you, well, where your starting price needs to be. And I think that realization is now kicking in.
Yeah, yeah, and that must dictate where you think the exit is going to be. Must dictate the investment strategy, as it were. And but tell me, you mentioned earlier about a couple of companies that you'd exited
Yeah.
successfully. Which ones were they? And if you're okay sharing names.
No, we are. So we exited three companies. Well, the one company is outside of the X space. The first investment that we did was in a Dutch-based company called Fairphone, and that's a modular phone. So let's leave that out for now. But there was a solid exit to actually to private equity. But both Connectera and Augmenta, two other portfolio companies of ours, they are being sold towards strategics. Augmenta is, well, I think, quite a known example of a successful exit in this space. It's a true agtech company which provides, well, literally a direct communication between the sprayer and cameras on a tractor, and also indeed enables, in the end, autonomous driving for tractors. That's their long-term vision. And we joined that company at the same moment when also the strategic CNH joined, and we had an amazing journey in general. Also with CNH as a great corporate investor, like a strategic being on board, we supporting the development.
Yeah,
Um, and yeah, it was, well, and everybody knows pricing, etc. So for us, it was a good proof point to show that we can make good value for money,
yeah.
whilst also having been able to embed the impact with throughout this organization with a true mission, true KPI, and true KPIs, and people actually really living in that company because of the mission that it had.
Yeah, I remember you mentioned this when we first spoke. Actually, it was more about when you think about impact, when you think about exit, that the journey continues, right?
Yeah, that's it's yes is the answer. And again, back to uh, the LPs that we have, they often ask like, so how do you ensure that impact will remain embedded within an organization that when you exit a business? Um, in the ideal world, you even anchor that in documentation, right? You anchor that there's a promise that like the way how they implement the impact will remain there. On the other hand, that's quite tough, especially when you do 100% sale. Our aim is to truly embed the impact throughout the culture of the business, that as long as the people working there, the impact will be there as well. Because if that's not there, I mean, you can put everything on paper, but the impact for sure is driven by the people and not per se what's on paper.
Yeah, no, absolutely. But tell me also, just the question I wanted to ask you as well was, you mentioned right at the beginning, we were talking about impact funds, right? And around, with Pymwymic, you've bundled private wealth, as it were, together. When you think now about, about people's interest in investing in this space, where is it something that's growing? Is it developing? Is there access to more pools of capital to come into this space that can think long term, that can think around this kind of integrated kind of system change that's required? Are you still hopeful of this?
Oh, for sure. I mean, like in the ideal world, also in the fund structures that we have, you have a open-ended structure, as you call it, right? So without a term. So like right now, traditional terms are 10 plus 2 years, basically. And what we know in general, especially for the X space, as I mentioned to you before, like cycles can be longer than 10 years. So if you then, as the fund, are being put under pressure in year 8 or 9 that you actually need to exit, that doesn't per se help in getting the best value out of the proposition. So in the ideal world, like again, you would have open-ended structure. On the other hand, like especially for the bigger institutionals then coming in on our sub-fund level, they simply need to have a term, right? They are not yet there that they are willing or able also to their beneficiaries or their shelves to say, well, we can live with an evergreen structure and we get the money back the moment when it's ready. And that's a difficult balance, and I do believe that we are pushing the boundary continuously. So, like I think 10 years ago it was more 5+2 or 7+2, and now it's 10+2. For the next fund that we are aiming to fund, that we aim to start fundraising within 1.5 years, for sure we will push that boundary again, and maybe that's then 12+2 or 13+2. Like who knows where we end up. But I for sure see that the way how we invest, where we anchor both financial results and impact results, is becoming more the norm, right? But that also simply has to do with the underlying dynamics of the new tech that is being rolled out in every industry, but especially in ag. It in most cases has to do with producing more with less. And whether it's with less input or less negative impact, in the end, they are in a way becoming more intertwined, because like climate change is becoming quite obvious to everybody, but also simply soil degradation and the fact that we have declining yields in most of our agricultural lands in Europe needs to be tackled. And now with the whole geopolitical situation, it becomes even more apparent. And the theme now, what I say, like has changed a bit away from climate change or climate solving the climate issues, more towards food security, which still, I mean, it's a different narrative for the same solution. So
yeah, absolutely. It's almost like sustainability is a little bit, it's a bit overused, isn't it? But you're right, food security is a little bit more relevant. It's a subsection of it almost, isn't it? Really, that's really relevant right now.
yeah, and in the end, we also need to be a realist, because like it's amazing to provide the end users that we are supporting, the growers and the farmers, with an amazing solution, which is then better for the climate. But in the end, a farmer only has, well, let's say 40 seasons to actually get his pension secured. So like it's also quite pragmatic that a farmer also simply needs to see ROI from technologies, besides the fact that he or she also supports the climate change mitigation.
Yeah, no, absolutely. And it's you know what the great thing. I really appreciate you coming on and talking with you today.
Sure.
It's been a great chat. A couple of things that really stand out. You love what you do, don't you?
I do. Yeah,
You
yeah.
really
Oh,
do.
yeah.
You love what you do, and great hearing about your kind of transition and the energy you put into and the energy that you put into this, and it's been great hearing a little bit about the kind of journey and the size of the company and the focus and how you approach things. So listen, thanks so much for coming on today. Really enjoyed having you on as a guest.
Really appreciate it, and thanks for having me.
Oh, absolutely. And look, to all the listeners, please hope you enjoyed the discussion. Lots to take away from it today, and we'll see you on the show next week.